Hello, and welcome to today's edition of Geostrategy in Action, in which we explore how companies around the world are adapting their operations and strategies to key geopolitical developments. So I'm Courtney Rickert McCaffrey, the EY Global Geostrategy Insights leader. Today, we're going to dive into how banks are managing the current geopolitical environment. So this is actually the first in a series of episodes in which we'll explore how geopolitics is affecting a specific sector and how organizations in that sector are adapting to continue to position themselves for growth, even amidst geopolitical turbulence. So I'm pleased to welcome Jan Bellens, EY-Parthenon financial services leader, to Geostrategy in Action today. So he's going to share what he's seeing and hearing in the banking sector around the world. And since we're focusing on political risks for banking, of course, the first question I have for you, Jan, is around regulations. One of the most impactful political risk trends that we've been monitoring in recent years has been really an acceleration in regulations across jurisdictions and simultaneously the divergence of regulatory standards and reporting requirements in different jurisdictions. So obviously this is, creating some challenges for banks as well as other institutions in other sectors to manage some of those conflicting regulatory requirements. And actually in the banking sector in particular, I wanted to share that in our most recent edition of the Geostrategy and Practice survey, 82% of executives at banks said that political risks have had an impact on their reputation and compliance in the past 2 years. So I think that's really indicative of just how impactful the regulatory environment is for banks around the world. So, Jan, from your perspective, what would you highlight in terms of new regulations that are affecting banks today?
And thank you, and thanks, Courtney, for having me on this podcast. It's great to be here. Well, of course, banks are heavily affected by what's happening in the geopolitical landscape. The good thing is that overall, the global banking sector has proven to be very, very resilient and is also, of course, keeping a very, very close eye on what is happening in geopolitics, including, global trade, which of course also affects global banks heavily through their portfolios. The regulatory divergence you describe indeed has already been a challenge for banks that operate internationally and that operate globally. Dealing with regulatory fragmentation and different regulations in different jurisdictions, also jurisdictions moving to more sovereign policies prove a challenge for banks that are operating in multiple jurisdictions and are operating cross-border. And I think, as you point out, we see that regulatory fragmentation not going away and unfortunately even accelerating a bit. In particular, we've seen one of the recent ones in the US that of course gets a lot of attention is the Genius Act, which leads to legislation that affects stablecoins and digital assets. And of course that is has a big impact, certainly has had a big impact in the US on this particular industry, and it also leaves the other jurisdictions, Europe, but also Asia, thinking about how to respond to this and how to make sure that we don't see unlevel playing fields happening across the world. That's just one key example, but overall, I think one of the key things for regulators, but also for banks, is how do we make sure that the global banking sector overall remains resilient and remains protected without undue costs or risks that are inserted into the financial system.
Yeah, that's really interesting. And obviously it's pretty early days for the Genius Act and trying to think through the implications of it. But maybe just a couple follow-up questions on that. How do you think that's going to affect some of the questions and sort of speculation swirling around the role of the US dollar or US Treasury bills in global financial markets? And then is there anything you're seeing from banks either in Europe or Asia in terms of maybe how they're positioning to respond to this already? Are there any sort of risks or opportunities that they're most focused on with respect to the Genius Act?
Yes, I think, and look, the Genius Act in itself, I think, there's lots of observers with different views, but there's certainly now an opportunity to create, a new monetary system effectively that's completely backed by either the U.S. dollar, directly, or by U.S. Treasuries, and of course that creates more opportunities for the dollar and for treasuries to operate on a global scale. So it might further increase the U.S. dollar dominance. And at the moment already, over 95% of stablecoins are U.S. dollar denominated. So we're going to see how this evolves. Certainly, we will also see European banks and Asian banks react to this, and we might see also the emergence of more euro-backed, stable coins, which and of course, Europe has its own regulation on that front, which is stricter than the U.S., but it also has regulated this industry. I think, but in the meantime, we certainly see, especially in the U.S., more more free policies regarding the financial system, and there's more in the pipeline. So that's certainly a concern for other regulators around the world. How do we make sure that we don't create that unbalanced playing field in financial services overall?
Yeah, it's fascinating. I think it's a good reminder to not take any one sort of geopolitical or political or regulatory development in isolation, because obviously there's been a lot of speculation about the role of the U.S. dollar given some of the trade and tariff policies and other things happening. But then this seems to maybe point in the other direction. So important to have that broader perspective. And maybe on that note, I wanted to widen the aperture a bit here, because you mentioned earlier, a few minutes ago, the idea of sovereignty, which of course we've seen become a real driving force in how governments shape policies and regulations in the current environment, and really how they try to position their economies for future, competitive advantage. So, recently there's been discussion around the prospect of a digital euro, kind of related to that goal of sovereignty. So what are you seeing with respect to this idea for the digital euro? Any discussions that you've been having with clients in this space?
I think, Courtney, let me first address perhaps the element of sovereignty, which is certainly a big topic with policymakers and also with clients alike. And I think the digital euro is one of the responses to that, particularly on the payment system in Europe. But in conversation with clients, you find there's actually a lot more, and perhaps also some even higher priority components. There's now real debates about the financial infrastructure overall, and I'm talking payment systems, but I'm also talking, technology and cloud providers, where there might be concentration risks on particularly often the US. And so there's certainly a view that to be more resilient over time, and to make sure that international banks can continue to operate in a world that is less fully global and is more sovereign, that they can continue to operate and can continue to make sure that they have that resilience versus what's happening in geopolitics. As you mentioned, the digital euro is one of those items, which would make Europe less dependent, in particular on the U.S., mostly the U.S. or international payment rails, and that's one of the responses. But as I said, there's much more needed. But there's clearly now a view from a lot of the banks around the world, but also regulators and policymakers, to make sure that we can create that sovereignty, or at least that resilience, in a world that's getting unfortunately more fragmented.
Yeah, absolutely. And I think it's good that you highlighted too, kind of the connection to other sectors, or some of the the inputs or technologies that banks rely on to conduct their business, right? So it's not just about the banks themselves, but also all of those other, technology service providers and others that they rely on. And I think that kind of gets to the cross-cutting nature of a lot of this, even though we are focused on the banks today.
Absolutely.
Yeah. Well, so, what we find in a lot of our conversations about geopolitics is that it tends to be quite negative. We often focus on the downside risks because it's sort of easy to do that, given that there are so many. But of course, with any, policy or regulatory change, there can also be upside opportunity if you know where to find it. So that's why we talk about geostrategy, right? The more strategic political risk management that can really position organizations for future growth. So, in that context, around, there is a lot of negativity about kind of, the geopolitical environment and the global economic environment overall. But nevertheless, it seems like the banking sector has remained quite busy, quite resilient, to use a word that you just mentioned. But do you think there's sort of an optimistic message that can be taken in spite of this volatile environment?
Optimistic is perhaps a bit of an overstatement, Courtney, but I think there's certainly an element of, I think optimistic would be a bit of an overstatement. But overall, as I said, the banks are resilient. They have dealt and continue to deal with the trade and the tariffs, quite well in their books. I think they have a pretty good view on what the potential impact could be, and of course, they are also supporting their clients in working through those changes and potential impact to the supply chain. So they are really there to support their clients in that journey, and oftentimes that indeed creates great opportunities for being a partner to their to the clients of the banks. As you can imagine, the volatility in the market is for a lot of the banks also a pretty good thing, because it creates opportunities there, revenue opportunities there. So that has also proven to be a positive. And then I think given the responses that we've seen in Europe, in some markets like Germany, for example, to really invest heavily in infrastructure, particularly, for example, in defense infrastructure, that also creates opportunities for banks. And there we're also helping our clients and our banking clients to respond to that, to support that sector, to support those investments, and that again creates lending opportunities. So I would say, cautiously optimistic. And it's also good to note now that just over the recent days that there's less uncertainty, which I think will create further growth opportunities that are there for international banks.
Yeah, absolutely. I think a lot of C-suites and executive boardrooms and whatnot around the world are pleased that the uncertainty levels seem to be coming down, at least for now, which is great. And as you mentioned, the banking sector is really interesting because they really have a sort of a front seat view of how this is playing out in all the different sectors around the world, given that they serve clients in all those sectors. So I think the banks are kind of uniquely positioned in that respect. So thank you so much, Jan, for joining today and sharing your thoughts with us.
Thank you, Courtney.
And thank you all for joining and tuning in to this episode of Geostrategy in Action. We hope to see you next time.